So I think what we'll do is we'll kick it off, and then hopefully we'll get some of the late stragglers in. So good morning, everyone, and welcome to today's Navigating COVID-19 webinar. My name is Chris Mann. I am the sponsorship specialist with the Halifax Chamber of Commerce. It's my pleasure to welcome you all here today and to introduce our guest, Derrick Dempster, Audit and Advisory Partner with Deloitte. Derrick is here today to walk us through Deloitte's amazing online economic recovery dashboard and show us how we can use it to help our business prepare for recovery. Updated in real time, this dashboard is a monitor of health, community, and social activity, along with financial and economic indicators that will signal when the rebound stage has arrived. Derrick is the firm's leader of the Canada's Best Managed Companies program and Deloitte Private for Atlantic Canada. He brings over 25 years of unique experience to his clients, having been an entrepreneur and involved in running many successful companies in a variety of industries. Derrick's number one priority is to bring value to his clients and to help them improve their business. Thanks so much. We're glad to have you here today, Derrick. Before we start, if you have any questions at any time during the presentation, please leave them in the Q&A box, which you will see a button for at the bottom of your screen. If you'd like to make a comment in the chat box, we please encourage you to do so, but to address the message to panelists and all attendees so everyone can see the post as it may be interest to all people that are participating. There's also an option to address your message to all panelists, which only I and Derrick will see. So again, thank you so much for joining us today, and I'm going to hand it over to Derrick.
Thanks, Chris. Chris, just a quick mic check. You can hear me?
I can hear you great.
Perfect. Thanks for having me on today. I really appreciate the opportunity to present our dashboard, which we think is an extremely useful tool for companies and individuals to assess where we are in terms of the pandemic, and more importantly, where we're going, and when the recovery starts to take form. This will help let people know that and also assess speed. Before we get into the dashboard, you can see that the early part of the dashboard, I'm displaying my screen for everyone to see. I'm going to walk through the dashboard here in a few minutes, but I think it's important to do a little bit of level setting before doing so. So 2019, so the start of 2019, which is over a year ago now, started on a very sour note with financial markets deep in correction territory after one of the worst Decembers on record for North American equity markets. On December 31st, 2018, the TSX Composite Index was 14,323 points and was down 12% for the year. Markets were convinced that a weakening world economy, increased protectionism, heightened political risks, trade wars, and tighter monetary policy were running the risk of a global recession. Because of that, central banks responded, and by mid-year, the US Federal Reserve had cut rates. The Bank of Canada did not follow suit, but most other countries did, and over 20 other central banks did similar actions as the Fed, causing a complete reversal of global monetary policy at that time. Despite that, recession fears lingered, partly due to the expansion globally and in the US being so long. The geopolitical environment also played a large role in fueling recession fears, as issues like Brexit and the escalating trade wars between the US and China became more prominent. These fears caused growth in manufacturing to stall completely by the mid-year in 2019. And given manufacturing is generally a leading indicator, it certainly was indicative of serious economic risk ahead. In Canada in 2019, average growth was 1.7%. Healthy wage gains and low borrowing costs in 2019 kept people spending. On the downside, exports declined 1.5% as a result of softer global demand and a strong dollar. No surprise that rising household debt levels increasing at the level they were, at the end of 2019 was an increasing economic risk moving forward. Back to the equity markets, at the end of 2019, the equity markets, or sorry, the TSX Composite Index was at 17,063 points and was up by 19% for the year. On February 14th, 2020, the TSX was at 17,848 points, up 4.6% for the year to date in a month and a half. And at that pace would have grown by 37%. So this is all pre-COVID. And the reason I raise it is because the equity markets were far outperforming the economy, and it was the general feeling that we were headed for a correction in the equity markets regardless of COVID. And many felt we were headed for a potential recession or some kind of a downward turn in the economy, irrespective of COVID. And in fact, the consensus outlook for Canada for 2020 was modest growth of 1.8%. However, there were considerable risks that were flagged that could cause that to decline. So that's sort of the backdrop of what the general feelings were and the facts were leading up to COVID. And there's a rule of thumb out there that a crisis only exacerbates what was already a trend to begin with. So there were certainly indications that the economy was headed for a slowdown and a downturn. We were advising our clients back in the fall of 2019 that was something that they should start planning for. We didn't anticipate COVID to have this kind of an impact back then, and certainly nobody did. But that's what's happened, and COVID has certainly changed the game. It's a black swan event with no modern day parallel. And so that leads us to the recovery dashboard. And as I said, the economic and health impacts, the health and economic impacts, I should lead with health, are very well documented. Our dashboard is broken into 4 different categories, and you can see them on the screen here. The 4 being health, AI monitor, which is really a social and consumer sentiment bucket, financial and economic. And you can see that each one is given a status, and the current status is red, meaning that we're still in the crisis. And the status for those will change over time as indicators change. They'll move from from red to either yellow or green over time. It's our thought process that in the health category will be the leading indicator of movement, and it's our hope that turns to yellow very soon. With that, I'm going to demonstrate a little bit how this dashboard works. It's an interactive dashboard. You can make selections through drop-down menus to look at things differently if you choose to. So in the first category, the health category, you can see here for Canada, on the screen, we've got the most recent information on the dashboard is 64,680 diagnosed cases in the country. And the most recent day was 1,479 new cases. Those case levels are growing at a rate of 2.34% daily. The number of deaths are indicated, and the fatality case rate is also there. What I can tell you is from this screen, because I look at this every day, the number of daily cases in Canada is certainly declining. We were up over 3% a week ago. We're at 2.34% today. The fatality case rate has also been increasing, and you can see the trend here, the trend line. And the reason for that is because our daily new cases is dropping, but the death rate has not dropped yet. And it would be our thought that certainly that will be following a period of time where the number of cases continues to drop. If I scroll down a little bit further, you can see some more information here with the number of provinces and the number of cases per province, and some indication as to the caseload on a per capita basis. You can see there that Nova Scotia has the 5th largest number of cases in the country, but it has the 4th highest level per capita, which is this number right here. So for every 100,000 people, we have 100 cases. And for the, you can see the other provinces, which exceeds our per capita caseload. I also wanted to demonstrate, I'm just gonna have to change my mic, so if I lose you, please let me know. My battery's low, 1 second.
Chris, can you hear me?
Yep, you're good.
Okay. Saying unmute my speaker. I'm going to try and get rid of that. Can you see that in the middle of the screen, Chris? Sorry.
Sorry, I was just on mute. No, I can't. I can just see the dashboard.
Okay. So on the screen now is a grid for the province of Nova Scotia. And you can see the grid is flattening over time, certainly within the last week. If I show a similar grid for, say, New Brunswick, and this will take a moment to refresh, so I apologize for that. You can see that their caseload has flattened sooner and more dramatically than Nova Scotia. They've had an uptick, but that's simply one case because they've had so few, it's very nominal. And then if I show PEI, it would show something quite similar. But if I show Saskatchewan, which is an interesting one, you can see that their caseload started to flatten in and around April 14th, and things were looking good. And then all of a sudden, it started to go back up and is now on the upward trend again. I would like to show you the US curve, which I can show you here. And I can pick from a number of countries. I'm going to not do that because the dashboard, when I'm presenting through a Zoom presentation, takes a little bit longer to refresh, and I don't want to bog the meeting down. But if I were to show you the grid for the US, and sorry, and I can show the country here as one, it would look very similar to this. In other words, it continues to rise. And in fact, if I were to be able to show you the US, I would show you Georgia, which is the first state in the US to start to relax mitigation measures to prevent further spread of the disease. You would see, even despite the fact that they're starting to open up their economy, or they were the first state to open up their economy, there's still very much an incline, which is a cause for concern, obviously. That's the health component of the dashboard. I'm going to flip through to the AI monitor, which is an interesting one because it draws on a number of different media sources, both traditional and social media sources, to come up with sentiments and other factors, which I'm going to go through in a minute. And you can see here, again, I've got the ability to look at other parts of the world if I choose to, or all of the world combined if I choose to, just by simply selecting from the drop-down menu. I've chosen to concentrate on Canada for this presentation. And you can see that here, we've got a breakdown of how people are feeling with social media posts and other things. And we're currently sitting largely neutral, with 85.7% of the responses being neutral, 5.7% being positive, 8.6% being negative. I can tell you, when our dashboard first went live, which is about a month ago, a little over a month ago now, the sentiment was much different than it is today, as you might expect, with a large number being here under the negative category and almost none being positive, and a much smaller group feeling neutral. If I look at the grid here, you can see graphically the gap. So the red being the negative, the gray being neutral, and the green being positive. You can see that the gap and the area of red has certainly gone down. But engagement levels, so when you see this trend line going up, that means engagement levels have risen. So a greater response to a greater number of responses for which to draw data from. This indicator is an indicator of traffic flows, and in particular commercial traffic flows. And it's being portrayed here as a percentage of the baseline, which the baseline is set as March, pre-March, so pre-COVID. And it's got different geographies here that it's portraying. And again, I can go and I can look at any country here if I choose to. I'm going to stick to Canada. But you can see we're trending around 75% of the baseline, which in the US would be very similar. The logic being, of course, that we should see this start to trend upwards over time as we get closer to recovery, and that would be an indicator of a recovery in progress. Commuter traffic is on this grid, and the blue, so this is a measure of congestion. And again, I can look at a number of different areas if I choose to, just by clicking on these drop-down menus. But the blue here is the 2019 level by city, and the gray is today, or 2020. And you can see there's quite a gap in terms of the 2 years. And if we look at Halifax, we can see there is quite a large gap for Halifax. The largest appears to be Toronto here. So what we should see over time is this gap starting to close as the economy opens up and as social distancing measures start to be relaxed. This kind of traffic we would expect, and as people return to work in particular, we would expect these gaps to close. Here's commuter traffic trending by city, and you can see over here that we're somewhere in the range of 50% of the index. So all indications are, this should be of no surprise to anyone. This is an interesting slide, and it measures foot traffic, and I've chosen to display Nova Scotia because I think it portrays something very interesting. And I apologize if the colors are appearing quite faded, but in Nova Scotia, as you all know, last Friday, Premier McNeil opened the provincial parks. And you can see here there's a category called parks. And if I put my cursor over it, you can see that last week and during this week, we had quite an uptick in the amount of traffic heading into provincial parks. So it certainly is indicative of what the Premier was hoping would happen, which is people getting out, being more active, and hopefully that had an impact on people's mental well-being. I'm going to skip through the distance traveled. I'm going to stop on air traffic, and this I'm going to take a little bit of a chance here and focus on Canada for a minute. This may take a minute to refresh, so I apologize for that. But what this shows is a measure of air traffic, both scheduled, okay, which is the the gray part of the grid, and what actually departed, which is the green part of the grid. So in Canada, one second. In Canada, back in March, there were, or when this sort of started to have an impact On March 25th, there was 1,627 flights scheduled to depart in Canada, but only half of those departed. And you can see that the gap between the scheduled and the departed here early in the crisis, and as we evolved, you can see the gap was quite large, and it's getting smaller. To the most recent data is May 3rd. There were 457 flights scheduled, and 307 of those departed. Again, it's easy to change we can look at all countries combined, or we can look at a number of individual countries. Again, the thesis here is that as time goes by, you're going to see the grid start to shift back and upward to the right for both scheduled and departed flights. Here's the ugly part of the presentation, which is the finance and economic part. So for the end of Q1, real GDP growth was negative at -10. The prediction is it's going to be down 50% for Q2 and up 19 and 36% in Q3 and Q4. It's important to understand that those percentages are based on Q2 numbers, not based on the year prior numbers. So 19% growth in Q3 from a 50% reduction in Q2. We expect that the economy will start to rebound in the middle of Q3, but the recovery won't have concluded until sometime in 2022. That has changed over time. Initially, it was 2021, mid-2021, and as time goes by, this period seems to be pushing outward. There's a number of financial indicators here, which we can select to display graphically in the graph. I'll display the TSX Composite Index. I did provide some background information at the beginning of the presentation. You can see here the peak at February 19th or February 20th, thereabouts. And you can see the valley on March 23rd, sorry. And what's happened since March 23rd is really quite interesting, because you can see there's been a general uptick with some volatility. And most recently on May 6th, the stock market closed at 14,831 points. Another indicator that I like is this market volatility index, which tells us the volatility of the market. So if we display that, you can see that downward trends are, when the graph is going down, that's a positive thing. When the graphs are going up, it's signaling increased volatility. So the volatility of the market peaked on March 16th, and it's gone down since. And for those of you who follow your stock portfolios closely, you probably will have recognized that yourselves. But the rest of the dashboard is economic. I find this part not quite as useful as the other parts, because the information in the dashboard only updates periodically. For example, here we're displaying unemployment, and unemployment is only updated, hasn't been updated since March 20th. Although I just got a allnovascotia.com update earlier today indicating employment. I think it was in Nova Scotia is up exceeding 12%. So certainly we would expect this to rise when information is released in the not too distant future. So that concludes the presentation. I guess, Chris, I'll ask if any questions have appeared from any of the attendants, or if there are questions we can field.
Yeah, Sure. So great job, Derrick. It's, I mean, I've seen the tool or the dashboard, excuse me, a couple of times now, and it's really nice to have it kind of you walk through it for us. I mean, the amount of information is staggering, and hats off to you and the team at Deloitte to really putting this together. I mean, the thing that boggles my mind was the foot traffic, being able to see that and how it updates with where you're actually going. And seeing the parks, I mean, that's amazing. That speaks true to Nova Scotia, just having that open last weekend. So amazing stuff. So we don't have any Q&As yet, or questions yet, but I do encourage any attendees, if you have a question for Derrick, please hit the button at the bottom of the screen there, Q&A, and we can filter that out. But we do have a couple of questions here that we prepared. So we kind of talked about it being updated on a daily basis, but I guess, how do we know that we're using the most up-to-date relative information that's on the dashboard?
Yeah, so when I look at the dashboard, and we'll stick on health, at any time if you want to look on a grid, it just shows you the date right there. So the number of cases, and we're in Canada now, and it's just showing 64,680 cases. That's as of May 6th. And tomorrow morning, that'll refresh and it'll be updated for the next day's information, which would be May 7th, obviously. So you can look on any grid and point your cursor on any grid to see the relevant dates on any of the grids in the dashboard.
Okay, amazing. And then another question, I mean, you mentioned about having the update on unemployment from all Nova Scotia. What sources, where does Deloitte get this information from?
So the employment data would come from Statistics Canada, but you can see, for example, the health data is coming from Johns Hopkins. I'm just trying to find it here. Yeah, powered by Johns Hopkins data. So the different pieces of information are coming from different sources, but the employment data would come from Statistics Canada.
Okay, great. So, I mean, this would factor in for me as well, but say like, you know, I'm not adept at reading the financial trends of this, yet I know they're important to my business, especially if I'm a small business owner. Are there some tips and tricks you could tell us to grasp the data, especially, let's say for the markets, that could help us understand a little bit more?
Yeah, so if I flip down to the market, and I'll flip on the stock market.
Okay.
So as I said earlier, the economy, sorry, the stock market peaked back in mid-February, and it was our firm's feeling, and certainly it was my feeling, that the stock market was performing at a level that wasn't really supported by the economic activity in the marketplace, and that we were probably due for some kind of a correction, regardless of COVID. So, and that here, and then COVID happened, and it just dropped off a cliff, right? And so what you're seeing now is what we've seen since then is a quite a volatile trend line, right? Up and down. And but what we're starting to seeing is a more less volatile market with much smaller daily swings. I'd say 2 weeks ago, seeing a swing of 3 to 4% per day was pretty normal. In the last week, it's been a general increase in the last 4 days, but generally speaking, it's been 1%, maybe a little bit more than 1%, or maybe a little bit less than 1%. So we're starting to see people settling in and starting to be less hypersensitive to information that comes out about COVID-19, and less likely to want to either jump out of their equities or jump back into their equities based on news. So that's sort of changed over the last month and a half. And I would say, you know, if you have not rebalanced your portfolio yet, you might not want to do it now. But I would encourage everyone to get advice from their financial advisor before doing anything.
So we do have a couple questions here. So the first question from Jerry: the market appears to be anticipating a recovery beginning this year. What is the risk to the market in economic investment / growth from a negative surprise on the health index?
It's a great question. I'm going to start to answer that question, and at the same time, I'm going to see if I can change my health indicator to the US, because I think, quite frankly, my opinion is the biggest risk to the worldwide recovery is the United States at the moment. So the risk is that there's a second wave, and the second wave is worse than the first. That, I think, probably poses the largest risk. There's a race going on to get a vaccine, and the sooner we get to a vaccine, the lower the risk of that occurring. The problem is the second wave is anticipated to come sometime in the fall, and early predictions of when a vaccine might be available would be sometime next winter. So they're trying to close the gap and bring those together as much as they can. But if you look here in the US, you can see they're actually the daily percentage increase in new cases in the US is lower than Canada. Not much, but a little bit lower. And the fatality rate is also a little bit lower. But the trending is certainly a lot less favorable. And you'd be hard pressed to find any state that has a flattening curve, at least flattening to the extent that you would see in some of the Canadian provinces. So I mentioned Georgia earlier, and I didn't show you the grid because I was worried it would take too long, but I've been able to get it up now. And you can see Georgia was the first state that opened. And the grid shows that there's been no flattening in Georgia. The general fear, and if anybody watches CNN, you'd know this for sure. I'm not saying anything that you probably haven't heard, but the general feel is, I think there's 40 states in the US that are starting to reopen their economies. And the fear is that if that happens unsuccessfully, in other words, if we see a spike in the number of daily cases and we go back, instead of being at a 2% daily increase, it goes and it increases to some higher number, that we are going to be in for a second wave of economic closures or of closures within the US. And I think that poses, my own personal view is that poses the greatest risk to the entire world on how quickly we recover financially and economically from the pandemic.
Okay. So speaking of recoveries, the next question we have is, why are the recoveries of COVID-19 not included in your statistics?
It's a great question. And the reason is because when we started this in March, recoveries cases was something that wasn't really talked about a whole lot. And I don't even know that it was measured back then. So it's a great question and a great point, and I'll raise the point to see if we can have that added. I think that's a really good point.
Okay.
I think the recovered cases in Nova Scotia, if I'm not mistaken, are over half the reported cases now. So it's a really good, it is a really good measure to look at for sure.
Okay, great. And then a question here, I'm assuming this is based on the economic answer to the question before. That could be due to reporting practice / the low number / rates, I mean. Not quite sure if...
Yeah, so I'm anticipating, or I'm speculating, sorry, that they're referring to the unemployment rate. So I'll just flip to that piece quickly. So at 10.7%, just to be clear, right, that's based on information as of March 20th. So there is no question that we will have exceeded that. Having said that, the government measures that have been taken and that have been well documented, certainly the single largest government measure in Canada has been the wage subsidy. The whole intent of that is to keep people employed. So that will have a reducing impact on the unemployment rate. And if it's successful, which for all the companies I talk to, I would speculate somewhere between 70 and 80% of companies are applying for that wage subsidy. That will reduce the amount of unemployment we see for at least a period of time, in order that, and hopefully that period of time is long enough so that we start to see a recovery take shape and companies can afford to keep their employees after the subsidy runs out. If that doesn't happen, my speculation would be there would be consideration for a second wave of subsidy.
Okay. So another part of that was like the low numbers / rates in the U.S., meaning like also no reported cases and mortality.
Okay, so back up to the health monitor. There's certainly varying degrees of and levels of testing in various jurisdictions. Even within Canada, certain provinces are doing more testing per capita than others. Certainly in the US, that's the case also. This monitor does not factor in those kind of differences. It's just a straight reporting of the facts. So for example, in the US, they're experiencing a daily increase of 2%. That's based on reported cases. If there's unreported cases, obviously, we're not factoring that in here.
Right. Okay. There's a lot of great information on here. Is there someone available through Deloitte if they have more questions about just, they're looking at the dashboard saying this could impact my company this way? I'm not really sure. Is there someone at Deloitte that can answer those questions?
Yes, certainly they can filter their questions to me. Chris, if you can certainly share my email address with the attendees. And I'm assuming that we've already shared the link to the dashboard so that people will be able to look at this whenever they choose moving forward. Have we done that?
Okay, great.
Yeah.
One question here, it's someone that joined a little late, and I apologize if you did cover this as well and I missed it, Derrick, but do we know how many small businesses percentage-wise have taken advantage of the various programs on wages and rent?
It's a good question. I don't have a precise answer. I can answer anecdotally, and I can tell you that, as I said just a few minutes ago, for the wage subsidy as one example, I would say probably 70 to 80% of the companies that I speak to have applied. I would speculate that in one way, shape, or form, close to 100% of companies are going to apply for some kind of a program, whether it be the subsidy, whether it be the loan programs that are available, the first iteration of the subsidy. There's so many programs. I would be surprised if it was, certainly above 50%. I would say it's probably approaching 100%.
Okay, great. Just another question that came in through Randy. Do you believe there's a disconnect between the recent uplift in the markets worldwide and statistical data relating to COVID-19?
I'm not sure I understand the question. Can you repeat it?
Yep, sure. Do you believe there is a disconnect between the recent uplift in the markets worldwide and statistical data relating to COVID-19?
So I'm going to make an assumption that the question is asking if there's a disconnect between the equity markets and COVID-19.
And he also said relating to COVID-19, I'm guessing.
So it's a really good question. My own personal view is that we've not seen the end of the stock market volatility, and I do believe that there's risk that the stock market will have further decline. The extent of the risk and the extent of the decline is going to depend on whether or not, across the world, and in particular in the U.S., their opening of the economy is successful, and that is going to depend on whether or not they can do it safely. So if we see another spike in new cases for COVID-19, we can expect that there's going to be increased and prolonged economic ramifications of that. So the trick to all this is not to open up quickly, in my view, but to open up safely and slowly, so as to avoid that type of dip.
Okay, great. And Derrick, we have one more question here, and then we're gonna cut it off at that.
Sure.
You can't see the chat, but you're getting rave reviews on the chat here, so we'll make sure that you know about those when we're done here. Last question from James here. Any inflation forecasts and how that will affect wages / buying power / markets question?
Yeah, so our economists would say that there is some risk of inflation, but it's a low level of risk. I don't know if that is a complete answer to the question, but I don't personally perceive there to be a high level of inflation risk given the environment we're in right now because of the amount of stimulus that's been put into the market. That would be my thought, and certainly that's the thought of our economists.
Okay, great. So just before we close off here, there was another number of comments about whether we can show the link to the dashboard. We'll be sending up a follow-up email to all participants, and we'll make sure that link's in there. But if you go to the Deloitte website, Deloitte.com, and then just type in dashboard in their search, it pops right up there too. So it's easy, but we will definitely send the link out to all participants in our follow-up email on there.
Yeah, I'll just point out to the viewers too that if you look on my screen now, I'm circling something called COVID-19 Info Center. That's the dashboard, but to the right, you can see there's a read our daily economic update. There's an update. If you click on this button, it's going to take you to a different screen, and maybe we can, hopefully it doesn't take too long, that has more detailed economic updates from our economists. For those of you, so you can see, and you can click on any one of these, right, and get further details on anything that you'd like to read. And there's a number of them. You can see how frequently they get posted. So
great.
I encourage you to avail yourself of those resources.
Great. Well, we'll just sum it up there, Derrick. So thanks so much. This has been great, and by the feedback from the chat, I mean, it was really well received. So thanks so much. So thank you to every participant that joined us today. We hope we were able to provide some clarity and answer your questions. If you still have questions, please send them to concerns@halifaxchamber.com, and we will be sure to forward it to Derrick and his team. We're also hosting more webinars every week with experts in continuity planning, labor law, and stress management. Head to halifaxchamber.com/events for full lineup of our webinars. This webinar was recorded and will be available to all attendees shortly on our YouTube channel. And we're also looking for feedback on webinars, on future webinars to help us with our content. Just look out for a short survey in our follow-up email and tell us what you'd like to see in webinars, and we'll be sure to book that in. So again, before we close out, any final comments from you, Derrick?
I just want to wish everyone well. I wish everyone the best of health, and I wish you success with your business as we all fight to get through this pandemic and get to the other side when we start to see a little bit of economic prosperity again. So best of luck to everybody.
That's great. Thanks so much, Derrick. Thanks so much, everyone. Have a great day. Have a great weekend. Be safe.